Hey guys, welcome back. I'm Jeb Smith, and today we're going to give you an update on the housing market as of mid-July. Today's actually July 21st, and what we're going to do is provide you a little insight as to what is actually going on in the housing market. Now, depending on who you follow on YouTube or what you watch on the news may dictate what you believe is actually happening in the housing market, because a lot of people believe there's a foreclosure wave coming, that home prices are dropping. And then on the other side, if you're watching videos that I put out, I'm telling you that the housing market has been moving sideways to up, at least here in California. But I'm getting a lot of grief from people out there not providing actual statistics on the market. Now, I come from the other side where I actually want to hear a realtor talk about what's going on in the market. Numbers mean very little to me if houses aren't selling. But a lot of you have reached out and asked me to provide statistics on what's actually going on in the market. So what we're going to do today is we're going to look at a report that just came out on existing home sales. Now, this covers all four major regions of the United States. We're going to pull up the report. It came directly from the National Association of Realtors, so it's on their website, but I'll do you a big favor and post it in the link below if you want those actual statistics. We're going to bring it up. We're going to read from it directly. I took some time to highlight the things that I thought were important in there. But at the same time, we're going to tell you what that means for you, depending on where you live, what you should be doing if you're considering buying and selling. We're also going to talk about interest rates. There's a lot of information out there about interest rates. And then we're going to give you a little information on builder sentiment as well, what's happening with new construction. But before we get into all of that, I'd like to take a minute and ask a favor. If you're new to me, new to my channel, and you haven't already subscribed, do me a favor and hit that subscribe button if you're interested in staying up to date on all things real estate related. As always, I appreciate you taking the time to watch, and I'll do my best. If you have questions, leave them in the comments below. I always go back and try to answer those. So as you're going through it, if you want additional information, do me a favor and put that below, and I'll be sure to reach back out to you. But let's start by taking a minute and looking at the existing sales report that just came out today. That showed existing home sales jumped nearly 21%. Now, this is for the entire United States, not just here in California. And what is an existing home sale? That means closed sales. So properties that actually closed, these are the statistics that are coming up. So let's take a minute and look at this report. Now, as you see here, let's see, let me get on the right page here. Now it says total existing home sales. That's completed transactions that include single families, townhomes, condominiums, co-ops jumped 21% from May to a seasonally adjusted annual rate of 4.72. Now, I didn't highlight this, but it goes on to say that this is we're down 11% year over year, which is to be expected because we essentially lost almost 2 months of sales because of stay-at-home orders and all of that. So year over year, we're actually sitting at a pretty good pace with regards to home sales. Now, the median existing home price for all housing types in June was $295. That's up 3% from last June as prices rose in every region. So they break the US down into 4 different regions. Home sales, the prices rose in all 4 regions. So there's not declines in prices at the moment in any of those regions. Housing inventory at the end of June totaled 1.57 million units. That's up 1.3% from May. So we're up from May, but we're still down 18% from last year at this time. Now, that is the driving factor. That's the reason our housing market has continued to thrive. Inventory is really, really low. That coupled with, super low interest rates, below 3% now, and buyer demand is what's causing the market to continue to move sideways to up. Now, I know a lot of you are saying, well, what happens when the unemployment ends at the end of the month and the forbearances end and all of that? Well, we're going to talk about those numbers as well. We're going to actually bring up an update on the forbearance here in just a moment and tell you where we are on forbearances and what may happen if that does, if the forbearance, if the unemployment does end and forbearances end as well, what's going to happen to the market? Now, properties typically remain, or what does it say? Properties typically remained on the market for 24 days in June, seasonally down from 26 days in May, down from 27 days last year at this time. 62% of homes sold in June 2020 were on the market for less than a month. That shows you that homes are selling quickly. The fact that days on the market are going down shows you that buyer demand is there. Now, is buyer demand there because rates are low? Is buyer demand there because inventory is low? It's probably a combination of the two. And the fact that we still have so many people unemployed and housing is continuing to move sideways to up shows you that there's a surge in buying, right? That's where, people are wanting to get in the market. Here in California, as I've mentioned, we're having, if you're under $800,000 in the market that I'm in, multiple offers on properties, 15, 17 offers in some cases. I'm having a very, very hard time getting buyers' offers accepted because there are so many offers and prices are being bid up so high on these properties, 40, 50 grand in some cases, selling over the asking price. That it shows you how much demand is out there. Now, distress sales, foreclosures and short sales, that represented 3% of sales in June. That's about even with where we were in May. That's up 2% from June of last year. To me, not really something to be concerned with at this point. I'm not really alarmed by those numbers. Now, here's the regional breakdown that shows what happened in all the regions. In a complete reversal of the month prior, sales for June increased in every region. Median home prices grew in each of the 4 major regions from 1 year ago. June 2020 existing home sales in the Northeast rose 4.3%, recording an annual rate of 490,000. That's a 27.9 decrease from a year ago. The median price in the Northeast was up 3.6% from June of last year. Existing home sales increased 11.1% in the Midwest to an annual rate of 1.1 million in June. That's down from 13.4% from 1 year ago. The median home price in the Midwest was $236,900. That's a 3.2% increase from last year this time. Existing home sales in the South, I'm going to cut my phone off here, sorry. In the South jumped 26% to an annual rate of 2.18 million in June. That's down 4% from the same time last year. So home sales are going down, likely because of less inventory, because there's not as many homes out there, but the prices are going up. That's the key factor here. Now, the median price in the South was $258,500. That's a 4.4% increase from last year. And then existing home sales in the West ascended 31.9%. That's where we are, to an annual rate of 950,000 in June. That's a 13.6 decline from a year ago. The median price in the West was $432,600. That's up 5.4% from June of last year. Now, all of this data came from the National Association of Realtors. Like I mentioned, it's not me just making it up, but I'm going to post that link below if you want to read more information on it. So while existing home sales are going down, prices are going up. That shows you that demand is there. Buyers are there to buy property. So what should you do if you're considering buying or selling a property? We're going to talk about that in a minute. But first, we're going to look at forbearance rates. So forbearance rates dropped to a 2-month low. Forbearance rate of mortgage-backed loans by Fannie and Freddie dropped to a 3-month low of 5.64%, while the overall rate fell to 7.8%. That's the lowest it's been in 2 months. So forbearances are declining, but at the end of the month here in a week, we have unemployment going away. That additional unemployment is going to go away. So what's going to happen? Well, I don't know that a lot's going to happen because you still have the option for forbearance, right? It hasn't gone away. You can request up to 12 months per the CARES Act. So if you lose your job at the end of this month or the unemployment goes away and you're unable to continue making your payments, you now have the option of requesting forbearance if you need it. That's up to 1 year if it's federally backed. That means you're not going to have a bunch of foreclosures, a bunch of short sales this year, in my opinion. If anything, it happens next year. But even then, I don't think it happens. I think we're a couple of years out if, on the foreclosure wave, if one happens. But if you saw the numbers that I mentioned a moment ago, total inventory is down so low. And that's the reason prices are continuing to surge, multiple offers, et cetera. If some of these foreclosures do come to market, if some of these houses turn into foreclosures, I don't think that means a market crash. I just think that means you have more property to choose from. Maybe prices don't continue to go up. Maybe they go sideways. Maybe they go down a little bit because of inventory coming on the market, and the buyer demand slows. But that doesn't mean a market crash. A slowdown is not a crash. And that's what people need to realize, is that if you're sitting on the sidelines waiting for some big crash to happen, you're going to be waiting. You're the same people that waited in 2012 and haven't purchased yet, waiting for that decline to happen. Where interest rates are right now, below 3%, in some cases 2.5%, that equates to, that $600,000 property that you were looking at 2 years ago when the rates were 4.5%. You can buy an $800,000 property now for 2.5% interest rate, and your payment's the same as it was 2 years ago when the property was less. So don't be so concerned about the price you're paying for the property. Worry about your monthly payment and the fact that you can continue to make that payment. Now, if you're a buyer and you're looking to purchase in this market, you need to be ready. You need to have your pre-approval completed. You need to be in a position to make an offer quickly. So, don't think just sitting on the sidelines and waiting for prices to come down is going to get you in the market. You have to be ready in this market to go, right? Especially if the right house pops up. That's what I'm seeing. I have clients that are ready, and we're still not able to get offers accepted because of where prices have gone. If you're interested in selling, it's a really good time to sell, just because there's not a lot of inventory. Now, I can't say if you wait 6 months, you're not going to get more money. You could very well get more money, but you may also get a little bit less money. We don't know. What we do know is where the market is right now. Based on the data out there, buyer demand is hot. Inventory is low. Interest rates are low. Those are things that are very good for sellers. So if you price your house correctly, chances are it's probably going to sell, especially in the lower price points. As you get into the luxury market, things may change a little bit. So it's a different ballgame in that area. But I would say, in Southern California, if you're under 800,000, you got a really good chance of selling your property, maybe for multiple offers if it's priced right. So if you're a seller, take that into account. But, that's where we are today. Where are things in a month? I don't know, but I can tell you that July numbers, we're always a month off in our numbers, right? So the fact that we're reporting, mid-July, we're reporting June numbers. Mid-August, we're going to report July numbers. Those July numbers in August are going to surge. They're going to be high. I can tell you from the activity that we're seeing in our market, things are continuing to move regardless of what's happening out there with stay-at-home orders and all of that good stuff. Numbers are going to rise for the continued months. Now, I don't know, again, what happens months out from that, but that's where we are today. So if you have questions, you have comments, do me a favor, comment below. I'm long-winded here and I don't want to keep pushing this out. But if you have additional questions, reach out to me directly. You have a topic you want me to cover, I'm happy to do that as well. But as always, I appreciate you taking the time to watch. We'll see you again soon. Have an awesome day. Bye-bye.